Okay, welcome everybody to the F8 mentoring session for audit and assurance. Now, as I'm sure you are aware, this session was originally intended to run last week, but unfortunately we had a total internet outage here, I believe, and as a result of that, we weren't able to run anything at that point in the day on any subject at all. So we are making up that session right now. So, hello. Right, let me explain how this is going to work. The intention of the mentoring sessions is that they are question and answer sessions. They are designed primarily for you guys to ask me questions. However, my experience of these half-hour sessions is quite varied. Sometimes I get loads of questions, and sometimes everyone seems quite happy to sit back and just let me say something. So I always come prepared. And I've come prepared today to basically take us back through some of the highlights, some of the priority issues from what we've seen so far on our course. Now, this was intended to happen after class number 4 last week, but because of the technical issues, we're now doing it after class number 5, which means we've got a little bit more we can review because we've got a bit further on. So what I'm going to do is start off with the material I've brought with me. If at any point anyone wants to ask any questions at all, be they about exam technique, be they about technical knowledge, understanding, if there's stuff you've seen, terminology you've seen that you don't understand, if you ask a question, I'll get to the end, an appropriate break point in what I'm doing, and then I'll answer, because that's what this session is really about. It's for you. So, F8 so far. Ooh, a question before we start. Thank you. Do you think auditing a state-owned company will be the same as that of a private-owned company? If not the same, then what do you think might be different? What an interesting and very sensible question. Let me answer that straight away by telling you that you've just asked me a P7 question, because that's on P7, a bit, sort of. I'm wondering whether you're asking it because you're also studying P1, because the public sector versus private sector, a big issue on P1. On the F8 paper, we do not look at the auditing of different types of organisation by ownership. We just don't. So in terms of a state-owned company, I don't want to say too much because it's way outside the remit of F8. What would I say? Well, a state-owned organisation is still going to have assets and it will still have liabilities. It will purchase things. It will need supplies, for example. I'm thinking maybe a hospital here. It will still have control systems. The one thing it might not have is revenue from customers. If you take something like a hospital, if it's state-owned, then the customers, if you like, the patients, aren't paying the bill. It's funded by government. But apart from the funding by government issue, it's still got all the assets, liabilities, expenses, etc. of any private company. So frankly, it's not that different. Oh, you won't be reporting to shareholders, of course, because there aren't any. You'll be reporting to a government authority. But I'm not going to say anything else about that here because it is outside of the syllabus. But interesting question. Good question. Okay, feel free to keep asking. I'm going to tell you the highlights so far. No problem. The most important stuff we've done so far are 3 or maybe 2.5, because we haven't finished the third one, of the core practical topics. Those being ethical threats, audit risk and response. And we have begun, in fact we've done most of the technique stuff on it, the internal controls. Just been doing that during this week. But whilst this exam is about 2/3 practical, we shouldn't ignore the other third as well. And there has been some knowledge theory, and some of it is quite important and you do need to be aware of it. For example, we have already come across a number of audit standards covered by the course. ISA 210, two main things we saw in there are engagement letters and the preconditions for an audit. ISA 230, if you're wondering where 220 has gone, by the way, it's on quality control and it is not on your syllabus. ISA 230 looks at audit documentation. And we looked at that in our most recent class, I think, in the planning chapter. And we've looked at ISA 240, which is about fraud responsibilities, and 250, which is about the client's laws, and regulations responsibilities. So we've seen all of that stuff. We've also seen the planning standards. 300, which looks at the planning basics. 315, which is all about understanding your client and thus allowing you to identify the risks of, well, let's just call it risks for now, shall we, and keep life simple. As I'll be talking about that in a little while. ISA 320, which is materiality, and ISA 330, which is responses to the risks we identified up there. And as well as the auditing standards we've looked at, I suppose the other main knowledge areas which have come up have been the whole concept of assurance, in particular different levels of assurance, so positive, negative, if you remember that, and corporate governance. And that is basically a summary, a little checklist of the stuff we have looked at so far. So, in order of importance, I will start with a reminder of the core. So if you came to me 5 seconds before the exam, or maybe 2 minutes before the real exam, and said, "Paul, help, talk to me about ethics," what would I tell you? I would tell you that when explaining ethical threats, the one very important thing you need to know is you must say why it's a threat. I'll answer that point in a minute. Fiona, welcome Fiona. For example, this is a familiarity threat. Good, well done. But that's not explaining, that is stating something. So we now say, as a result, auditor might lack enough, important words coming up, professional skepticism to do audit work in enough detail. By trusting client too much, fail to detect the mistakes. So something like that, spelling it out as to why being too familiar is a potential threat. Right. Fiona, hello. Quick question about the mentoring session 2. I'm doing P1 as well, and they are both on the 12th of November at the same time. Is that right? I have no idea. The mentoring sessions, I do not timetable those myself. I timetable everything else. The mentoring, I let the tutors negotiate with our interactive team. Let me check that one out, because if they are both at the same time, as you say, and if you say that, I'm guessing they probably are, I will take a look at what else is going on, and I would imagine one of us will end up doing the mentoring session half an hour earlier, later, or however it fits in. Or if necessary, I'll reallocate the date somewhere. So yeah, thanks for pointing that out. I will check it out. Okay. So that is the main thing I would say about ethical threats. It's all about how you explain them. And as long as you remember that, you pretty much know everything you need to know. Just a little reminder, of course. The main threats are the threats to your objectivity or independence. Self-interest, self-review, advocacy, etc. Okay, so just a little reminder. But enough about ethics. Let's now move on to the second core area. And if you came to me 5 minutes before the real exam and you said, Paul, help, I can't remember what I meant to know. If a risk and response question comes up, that's audit risk and response, very importantly. If you came to me and you said, help, what should I be thinking about in respect of that, what would I say to you? Very similar to what I said about ethics, except this time it's not you must explain, it's how you explain the risks. The key here, and we've done this very recently, so I hope you remember this, is that they are audit risks, and therefore your explanations must be in audit risk language. In other words, what do auditors care about? And as an auditor, I care about two things. Where in the accounts is there a risk of a mistake? And is there a risk that I won't spot that mistake whilst I'm doing the audit? So risks, the financial statements are materially misstated, and risks I don't spot those mistakes are called detection risks. And therefore, your explanations need to say something like, if it's a risk of material misstatement, something like inventory is at risk of overstatement because, and then whatever the explanation is. And there's lots of reasons why inventory might be overstated. It's damaged and they haven't adjusted the value downwards. It's been stolen and they've not bothered writing it off. All sorts of reasons. The key point here is which financial statement item do you think is at risk? Try to say over or under if you can specify it, and why. That is the key. As long as you remember those three things, all you've then got to do is before exam day, practice. practice in your head. You don't even have to write these out. Great thing about explanations. Once it gets as far as the pen, that's the end. The key is to get the explanation right in your head before it reaches your pen. Provisions are at risk of understatement because the directors will not want to admit their guilt in this case by mentioning this in the accounts. Revenue is at risk of overstatement because the company recognises sales when orders are placed instead of waiting for the goods to be transported. When studying, is it best to do the revision kit questions instead of the questions in the course notes? Fiona, where have you been? I have said on multiple occasions, including once this week if my memory is right, that the questions in the course notes are older exam questions. There is nothing wrong with them, but because they are older, they are not in the current examiner's style. Well, most of them aren't. Some of them are too knowledge-based. I mean, they're not bad. It's just there's much better questions in the revision kit because they're more recent. So I would go revision kit. The ones at the back of the class notes won't do you any damage. I just don't think they prepare you as well as the revision kit does for this examiner's questions. Don't worry, Fiona, not a problem. But thank you, Sam, is that, for confirming I did not make that up. Detection risks, we will be saying things like the auditor might not spot errors in inventory valuation as the products require specialist knowledge. So that one's easier to explain. Just saying why auditors might have a problem spotting something. So there we go. That is risk, audit risk. The response to your audit risk will depend very much on what the audit risk is. Looking at those on the screen, if those are the risks, I suppose we could come down here and think, what would the responses be? What would I do if I was organising this audit? Well, the right-hand side of the screen's easy, isn't it? If you're worried about needing specialist knowledge, get the specialist knowledge on the audit team. Hire an expert. Seems pretty straightforward to me. Response to the other one, well, that's going to be difficult because I didn't actually give you an example. I just said inventory at risk of overstatement because. But I probably could respond to that, to be honest, because inventory should be at the lower of cost or net realisable value. So if the risk is overstatement, presumably what you're saying is that net realisable value might have fallen below the cost figure. Right, so how does the audit staff know what the net realisable value of items is? Well, net realisable value is selling price minus any costs that have to be incurred before it's sold. When you come back on the final audit after the year end, there's a good chance that the items they had at the year end have already been sold. So you can check the sales invoices to see if the selling price was greater than the cost of making the items. Easy. The far trickier bit in terms of response will be if the items are still unsold, by the end of the audit? Well, there's no invoices to check, so now you've got to estimate what these items are likely to sell for. So I would calculate how old the items are. Inspect for damage. And now all you can do is assess your estimate of the likely selling price. So those are the sort of things. The key is simply to address whatever risk you've dealt with. And there may be many ways of addressing them. So as long as you've come up with something relevant to the risk that you've highlighted, you should get the marks. Now the third core area, which we've just started doing, is internal controls. And with internal controls, there are three main things she can ask: control objectives, control procedures, tests of control. And one good way to get your head around this is to have 3 columns on the page and try and put something in one of the columns and then fill in the other 2. I'll give you an example. Let's start with the middle column just to be different. Procedure. Do a credit check on new customers using a credit reference agency. That is a control procedure, a thing, a process that a company might do. What is the control objective linked to that? Well, the control objective is to ensure we only sell on credit to customers likely to pay the bill. If I'm an auditor, how do I test that control procedure? I would inspect a copy of the credit report to verify the check has been done. So there's an example of all 3 elements linking together. But sometimes it's best not to start on the left-hand side with the objective and work your way across, because to be frank, that's relatively easy. Play around with it a bit. See if you can start in different places. Test of control, let's have another one. Let's start here. Observe warehouse staff doing quality checks on goods as they arrive. That is a test of control. I am observing something happening. What is the control procedure? Well, the control procedure is the staff doing the quality checks. So, when purchased goods arrive, warehouse staff should check a sample against agreed quality standards. And why is a company checking goods when they arrive to see if they're good quality? That's a pretty obvious question, isn't it? Control objective, only accept good quality items when delivered by suppliers. So there's 2 examples I've put up on the screen there Two examples which show you the objective, the procedure and the test, but just to be a bit different, instead of saying what are we trying to achieve as a company, the objective, what procedure should we put in place, and then how would our auditors check that, which is the logical way to do it. The problem is your examiner might not ask all three in a logical order. She might just ask you for tests of control. She might just ask you for procedures. So it's good if you practice thinking of these three things in different orders, just to enhance your understanding and ability to come up with the ideas. Right, well, I've managed to revise there 3 core areas. We've only actually got 3 or 4 minutes left. So if there's any other questions you're planning to ask, you want to start typing now if you're not typing already. What I'm going to do is pick out some of the non-core, so the knowledge stuff, and remind you about that as well. Let's make the most of the time. Let's pick out, for example, ISA 250, laws and regulations. Now, in terms of exam, how could this come up? Well, it could come up within the written questions. It won't be a whole question, but it could be 4 or 5 marks, because there's 4 or 5 marks of an answer plan here. What are the responsibilities of the external auditor and why? Right, the responsibilities are, you need to know and understand the important laws and regs affecting your client. What do I mean by important? Well, since I'm in charge of checking whether the accounts are true and fair, by definition they are important laws and regs if breaking them would have an impact on the accounts. And looking at that, laws and regulations can have a direct or an indirect effect on the accounts. Direct effect, I'm thinking things like VAT on a sales invoice. If the company is calculating VAT wrong, it is breaking tax law. And that means that the VAT will be wrong in the accounts. And the other fairly obvious one would be payroll taxes. If the company is deducting the wrong rates of tax, then the payroll figures in the accounts will be wrong. But if a company is doing the wrong VAT and the wrong payroll taxes, there are going to be other implications indirectly. Because when you break rules, you get fined. And if you have broken rules in the past, then as of today, you have got an obligation to pay the penalties. And that sounds like IAS Accounting Standard 37. Provisions, contingencies, etc. to me. And the other issue is if you have really broken the law, big breach, that might create a threat to your going concern status. And threats to going concern status, accounting standard number 1, going concern threats are meant to be disclosed in a financial statement note. Sorry, missed out a couple of words there. To be disclosed in a financial statement note. So those are the main responsibilities with laws and regulations. I will just say one more thing. If you spot a breach, so you see that your client is breaking the law or breaking some industry rule, you should tell somebody. And on this course, we tend to tell in the following order. Management. But management might say, we don't care, we're breaking the law. So then you go and tell the people who are overseeing management, the non-executives. And there is a group of those non-executives called the Audit Committee, and you are an auditor, so why not go and tell the Audit Committee? And hopefully they will punch the executives and make them start following the law. You might decide that you have a legal obligation, or maybe it is in the public interest, remember that? And you might decide to report it to an external regulator. Either because you think the law tells you you have to report this matter, or you think it is in the public interest. Because now, if you report this outside the company, you are breaching the confidentiality principle. So I hope you've got good reason to. Well, doesn't time fly when you're having fun? I have been very naughty there because I have now gone over by 3.5 minutes, and very upset people will start banging on the door of this studio shortly and saying, "Oi, stop." So I need to bring this to a close. There you go. Those are some of the most important things that we have covered in the first half and a little bit of the course. If you've not already done it, practice the progress test questions. Go back over the questions we've done during the course and check my technique, the homework questions, etc., etc. As I've said before, if you want to submit anything to me, be it queries you want to ask or questions you've done that you'd like me to have a look at, please email me. Feel free. Best of luck with your studies as you carry on. And please remember, I am heading overseas next week, teaching some F8 as it happens. So I won't be here for next week. Next week there are no classes, so I will see you in a week and a bit. Thank you very much, and goodbye.